Good morning and welcome to the Market Forecast. My name is John Hoagland. Thanks for trusting me with your time. Today is Tuesday, March the 2nd. As always, we're going to look at our markets in context through the lens of risk management. Looking first at the economic numbers due out this morning, nothing very impactful pretty much all day long. No majors. 7:55 Central this morning. The Red Book did come out. Two talking Feds throughout the afternoon. Markets more focused on information coming out later in the week, including unemployment on Friday. As far as news is concerned, U.S. equity markets are going to be opening in somewhat guarded territory as COVID-19 cases rise for the first time in about 8 weeks. And Chinese regulators are warning of potential bubbles in foreign markets. In earnings, we got a lot of retailers coming up this week. The focus today already out. AutoZone beating both. Kohl's and Target also beating expectations on both earnings and revenues. This afternoon we have Ross and we have Nordstrom coming out. Crude prices recover after overnight losses. Awaiting kind of a lot of data this week. We've got the API this afternoon. We've got EIA tomorrow. We have a OPEC Plus meeting that's going on Thursday. There's a energy thing that John Kerry is going to be talking at today. So lots of information, lots of potential opportunity in those in our equities markets. Just not seeing all that much right now. The market opening up, just kind of in a kind of balanced area from yesterday. We'll see that in the charts shortly. As always, we ask that you make sure that you like, share, comment, question, feedback, and heckling are always invited, and make sure you subscribe to our YouTube channel so you can be notified when we do go live. Checking the VIX, the volatility index here before we started, it was right around 23.33. No major changes in that from the close from yesterday. The dollar index continues to rise a little bit. It's back above 91 now at 91.19, up a little bit after off of yesterday's close. Always would love to say good morning to everybody. And I saw that we had Ralph first in the room again this morning. Ralph, you win the prize. Danielle, Brian, Bulldozer, Tanya, good to see you. Murph, always positive. Murph, good morning. Did you ever have a bad day? The answer is no. Every day is what you make of it. Prophet Eon, Will Doherty, good to see you. Bill, Clarence, Caesar, Laura, Troy, Emma, D. McGregor, good to see you. Danny Ireland, Rod, the chef is here. Mike, good to see you. Richie, Jason, Art W, James, good morning. Caesar, John, one question. What time range do you use? Do you place for volume profile for gold? Gold, regular trading hours, 7:20 Central AM to 12:30 Central AM. PM, I guess that would be. It's a very short trading day. I tend to leave my my profiles open in that for probably an extra half hour, maybe an hour, because sometimes you do see some pretty decent moves. Really depends on the volume. Just saying goodbye to my son who's leaving for work right now. Lacey says good morning, everyone. So gold, regular trading hours, 7:20 a.m. to 12:30 p.m. Time yo light a smoke. I used to, but I don't anymore. Ashton, Joseph, good morning. Jonathan, Emma, good morning. Shane, good morning. Rick, rise and shine. Yes, good morning. Shady Trader, good to see you. Andre, Jason, Mr. Shine's Mystery Channel, good to see you. JD, good to see you. The Dancing Bear in the house. Kevin Guy, Oleg, Rational Investor, good morning. Rocker, good morning, sir. Steve Blom and Savant Playback. Hey, good to see you. Nice Primo in the house. Good to see everybody. Good morning. I'm going to go ahead and put the link for group coaching tomorrow. That's at 1 p.m. Central. Love to see you there. Bring your questions. 1 week from tomorrow, we will have the market therapy session with Dr. Menaker. He will be back. Looking forward to seeing everybody there. I'll start posting that link probably tomorrow or Thursday. to get everybody prepared. Make sure you bring your questions. We're working on a topic as we speak. Okay, without further ado, I would like to jump into the charts this morning. We got a lot to talk about, and we're going to take care of some business. I hope you have a good trading day today. As always, we are looking forward to your success. Let's take a look at the charts now. I've got the 30-minute chart here on the crude. As always, we like to start with the daily, so we'll bring up the daily. We had a pretty decent look last night. That's the TPO profile. Here we go. Had a decent look last night at the weekly kickoff low, 59.60s weekly kickoff low. We took a look down to about 15 ticks through that 59.45. Didn't really get an opportunity to participate in that move down there because it did happen in the overnight. Rats. I hate that when that happens, but we do see open interest increase, still portending future large potential. We've been seeing open interest increasing over a long period of time. It started when we were trading down here, brought forth a pretty big move. We're still seeing open interest now continuing to come into the marketplace. So there's still some new energy, if you will. I know you guys like that pun. And some more energy coming into this market. We're going to be seeing this market active for quite some time, I believe. It's going to be providing some pretty good opportunities. So this one is certainly on the radar. It's an information-filled week, as I mentioned on the open. Let's take a look at the 30. Okay, interesting situation. We had a push down to our weekly kickoff low. We did not accept down there. In the overnight, we haven't had that chance in regular trading hour sessions, and we may not. It doesn't mean that we're going to automatically see another opportunity during the regular trading hour session. We had settlement right here at 60.64. We are opening in the middle of a double distribution trend day from yesterday. Yesterday opened up, balanced here, left, pushed lower, leaving very little volume, very little time spent, and then created an area of balance here. We've opened in between this point of this high volume node and the point of control. That tends to make us trade to both ends. We trade to this low volume node right before the open. We did that. 730 bar, we traded right to it. I'm looking for this market to come back and check the point of control from yesterday before finding new information or new opportunities. Don't forget, we are opening inside value and range from yesterday, so there is really very little change in the perception of value of crude oil. Lots of information due out. In the coming days. So I think we're probably going to be seeing our longer time frame traders kind of preparing and hedging themselves for anything that may or may not come out. It may just be kind of a non-event. We don't know. So I think with the amount of information and the OPEC meeting coming out, I think we're going to see a lot of, again, longer time frame traders kind of hedging themselves for anything that might happen. It may create some really big and decent opportunities for day traders and swing traders alike. We may see some pretty big opportunities as the week goes on. Suggesting, though, today, I'm going to stay patient. I'm going to see if we can get get price up to this point of control up here, which is right around 61.52. Not a huge move, maybe 30 points. And then I'm going to see how the market kind of treats the extremes of the range today. That's where I think the money's going to be made, if there is a lot. Again, they're looking for some kind of subdued action here in the crude oil due to the amount of information due out as the week goes on. So I'm going to stay patient. I'm going to chill. This market is by far off my radar. By far not off my radar. This market is on my radar is what I'm saying, just maybe not today. All right, so here's the E-mini S&Ps. All right, well, yesterday we had a pretty good push to the upside, kind of typical weak volume for upside moves like that. We did add 17,000 in open interest. That's the preliminary number. Oh no, excuse me. I'm looking at crude oil. No, we did not have an impressive increase in open interest yesterday in the S&Ps. Only just around 900 or 1,000 contracts were added. So that's not all that impressive, especially on an up move with very low volume and not a lot of open interest. That's not impressive. 38.58 continues to provide pivotal opportunities. On the opening yesterday, in regular trading hours, we opened right at it and we drove higher. We had took a look down close to it. This in the overnight session, unable to participate in that because it is, of course, in the overnight session. But we're going to still be kind of watching this 38.58 level for opportunities if the price does return back to it. There is a lot of unfinished business above this market. I've seen the all-time high was in the overnight session. Markets don't tend to like that. There are a couple of unfinished auctions coming off of those highs. We've kind of checked into one of them. There's one left, and then of course that overnight high. I'm seeing some traders talking about 4,000 by the end of the week. It's pretty aggressive, but it's based on options information. The 4,000 March strike is a very active level, a very active option. So there's a lot of people speculating that the activity up there may bring the base product or the futures product up to that level. So without any bad news, I would expect something like that. Again, we're looking for unemployment. We're looking for jobless claims on Thursday. Again, unemployment on Friday. Information due out. A lot of folks kind of maybe looking to hedge themselves against anything that might come out about that. But again, I think we're going to be seeing some pretty decent opportunities. And again, I'm really kind of focusing on the fact that we've left our all-time high in the overnight session. And now that may create a bias that I have to be careful for. I have to make sure and trade what I see. Again, we have to remember, we're waiting those unemployment numbers. Here's the 30-minute chart. Here's our open right at 38.58. Big push to the upside. Unimpressive as far as volume and open interest increases are concerned. What did we do last night? Well, I think the Chinese, the Asian markets were lower. China kind of talking about their concern for bubbles in foreign markets. Brought us lower. We got a little bit too short for our own britches down here in short time frame. We've come back towards settlement, which is 38.9875. Put that on your charts. And the market is going to be opening in range and in value. See if we can see this is not our all-time overnight high here. See if we can even see it here. Can't get back to it. But there are some kind of unfinished tops in daytime frame session up here. This was one of them yesterday that we were kind of focused on for a potential move up to. You can see this double top here on this day. Not necessarily very strong high. We've got another overnight recent high up here, and then we've got our all-time high back behind that. So, again, and I know I say it a lot, I think it's going to be very important for us to try and stay patient today in this market. Look where our overnight low and overnight high are. We've got a high volume node here. That's our overnight low. We have a bit of a high volume node here. That's our overnight high. And we're right in the middle of the value area from yesterday, which does suggest that there's very little change in perception of the value of the S&P. What are we going to be looking for? Do we have any overnight inventory with which to look for an early opportunity today? No, we don't. We got too short in the hole down here. We're back towards settlement. I'm really going to have to try and keep my hand off the mouse early today. I might be looking for an early opportunity off the opening range, but it's kind of unlikely when we are opening this centrally located inside of the area of balance, which is the value area from yesterday. So, okay, NASDAQ TPO chart to start the session. You want to set that to start at 8:30 Central Time, Shady Trader. 8:30 to 3 o'clock. 8:30 to 3 o'clock. Yes, 8:30 Central Time for sure. So that's the situation in the S&Ps. The Nasdaq is going to be a little bit different. Remember, even though they are very related, they sometimes are providing very different information. The volume was kind of typical again, very similar to the S&Ps. We lost 6,000 in open interest on this move to the downside, which was considerably deeper than the loss that we sustained last week in the S&Ps. Last week we didn't even get it to a 5% off the all-time high move. We got closer to 10% in the Nasdaq. So there was certainly a little bit more of a push to the downside and probably a more of an accumulation of shorts. And I think that a lot of those shorts got squeezed out of the market yesterday. I'm looking at this as an area of balance of about 5 or 6 days. We're holding right up here near the high of this balance area. I'm going to be watching this to see if we find any signs of acceptance, which might push us back up towards our weekly kickoff high, which is 13,447. Or if we can't hold above this, we may start to see this market just kind of rotating in this area of balance for a period of time. Again, I believe we still have some unfinished business in the fact that we have our all-time high in the overnight session and possibly another situation where there were some unfinished upside auctions in the day time frame all the way up here, but we've got a long way to go and we've got a few speed bumps to get there. We've got some hurdles to get over. Our overnight high is going to be one of them. Weekly kickoff high is going to be the next one. On the 30-minute chart, see, this is where they differ. We have settlement up here outside of value. We have our move to the downside. We have a move back to the settlement price. No overnight inventory with which to look for. But this market is more likely to open outside balance than inside balance like the S&Ps. So I'll be looking for possibly an opportunity to get the opening range trade. The opening range trade is that first minute of trade, 8:30 to 8:31, whichever side of that 1 minute bar breaks out, you go into that direction, you put your stop on the other side. The thing about it is the Nasdaq can be a kind of a bigger risk to take that opening range trade, but we're opening out of balance in the Nasdaq where we're opening in balance in the S&Ps. Keep that in mind as you go through the day, and again, no overnight inventory with which to use. So I think our question for the Nasdaq is going to be, are we going to early and quickly reject value and range from yesterday to look for a move up to our weekly kickoff high? Or are we going to get up here, peter out, and come back into value, which may create an opportunity for us to go the opposite direction if we reaccept inside value from yesterday? In other words, if we spend time and build some volume below the value area high here at 13,235, let's say, we may see this market take out our overnight low and bring us back for a recheck of value low. It's called the value area special situation play. It's in the book Mind Over Markets. Jim Dalton wrote it, but he doesn't really listen or watch for that play anymore. I tend to watch for it because if you do it right, it can be a tricky opportunity, but if you do it right, it has provided some pretty decent opportunities for me. So I'll be keeping an eye out for that possibility. Not thinking we're going to be hanging here. I think we're either going to reject yesterday's range and test weekly kickoff high, or reaccept yesterday's range and value and perhaps put a move back down towards value low from yesterday. Gold. What a mean market. What a bunch of rats these guys are. Here's our move from yesterday, okay? Let's start with the daily, I should say. So we've been holding downside structure. It shouldn't be a surprise to anybody that we continue to kind of push this market lower. We saw some weaker volume yesterday. We saw a 1,000 contract decrease in open interest. As price continues to move lower, though, it seems to be kind of cutting off a little bit of volume, and the open interest has been dropping in this market for quite a while. It almost seems like there's a lot of eyes that are not even interested in watching what gold is doing. That is bound to change. When we have a big drop in open interest or a big boost in open interest, there can be some serious changes coming in that market. So the overnight, look where we traded to. We traded within 6 ticks of our weekly kickoff low. The dirty rats did that in the overnight session and did not give me my opportunity to participate. I hate it when that happens. But does it seem like there may be somewhat of a necessary pullback in play for potential prices higher? It very well might. Take a look at the 30-minute chart. Here's where we were last night. I'm snoozing practically by that time. Here's settlement right here, 17.23 even. No real overnight inventory. Still holding below value from yesterday, but inside value from Friday and yesterday. No overnight inventory, no real reason for me to get too excited about getting into anything in this market just yet. I'll be looking for and hoping for and practically praying for an opportunity to see this market come back and retest this level in regular trading hour session. Without that, I'm not sure I'll be doing much here. It is far from being off my radar. There's too much information that is leading us to say, yes, we may kind of fall into a little bit of a snooze here, but with a lot of participants on the sideline, there's a lot of participants left to come back into this market when a continuation or a change in direction is presented. So we're in range. We're out of balance from yesterday, largely in balance for the last 2 days, right near settlement. No rush. No rush. I'll be looking for that opportunity to go and get that test down to weekly kickoff low. And, there's a lot of longer term traders kind of wondering, is this going to be an opportunity for me to start accumulating longs? If things start going south in the economy, gold has been traditionally one of the biggest of stores of value. Gold, silver, all the metals may see some continuation or some change in direction to the upside if things do go south. We don't know that. It's one of the issues. Okay, volume drops in central location here. I got to get back to the daily chart. Volume has been kind of falling off now. We had some decent volume up near. We get last week's weekly kickoff high remains this week. We've got a weekly kickoff high down here at 1975, 1.1975. That is, we're still pretty centrally located. We were centrally located yesterday. There's not a big change in what we're going to be talking about in this market. As a matter of fact, as long as we stay in this range, this market might start to slip off my radar, might start to slip off my cracker. Because I think we're kind of falling into short time frame control here. I think we've been largely in short time frame control for the last 2 months in this market because we've kind of become rotational. We lost open interest, 3,700 yesterday, lower volume, still centrally located. Short time frame control. Short time frame control means that shorter time frame levels for day traders are more likely to be respected. If you remember yesterday, we were talking about, all right, well, we were open. The 8 o'clock bar was attempting to come and close the gap. Well, if we can't close the gap, we look for opportunities in the direction of the gap. If we recognized the lack of the gap close as an opportunity as we were approaching it, we got some pretty decent trade location for a move in the opposite direction, but in a very small range. It's got to be worth it. And I think that the small gap that was left here was probably worth it. We didn't have to risk much to see if we were not going to close that gap. Anyways, the market really just put in a low, put in a high, put in a low, and rotated the rest of the day. We had a pretty deep move to the downside here in the overnight. We kind of holding some overnight shorts, perhaps, that are now unraveling or reconciling those overnight shorts and taking us right back into range and back into value. There's going to be a lot of targets that we're going to be able to look at and we're going to be able to see as potential entry levels if we're going to see this market continue lower. Well, there's value low, there's settlement, there's point of control, there's value high. I'm going to focus on the furthest away area for an execution instead of trying to kind of hurry and add risk to my strategy. If I'm thinking about, and I'm not, if I'm thinking about looking for an opportunity to short this market, I'm going to see if I can get a move all the way back up to high of value before I even think about doing anything. There's too many targets between here and what I would say is the better trade location according to the information from yesterday to get into a short, if that is what you're thinking. Okay, so again, this one is maybe slipping off the radar. It's been kind of on and off the radar for a while, but I'm really not going to be focusing too much on it because I don't think there's that great of an opportunity. Some of these other markets are probably going to be providing a better opportunity as the day goes on here. All right. The 10-year rates have settled down back, just kind of hanging around just below that 1.5 level as the March expiry nears. We only lost 10,000 in open interest yesterday. There's, maybe about 100,000, I think, left in open interest in the March, and it's going to be expiring soon. That may be more of the focus. Open interest is, again, still going to be blurry because we have not had that expiration yet. We had a pretty deep move to the downside. We're kind of falling in centrally located in this bar from Thursday, where this was the day that the rate peaked over that 1.5 in the 10-year, and everybody kind of freaked out, but it's now holding below that. It's just kind of settling in here. Take a look at the 30-minute, and we'll see what we've got going on here. Again, the market. Oh, hang it. Got a little bit pushed to the upside here. Maybe we got a little bit long. We're out of those longs. We're back at settlement. Opening in range and in value does suggest trying to be patient, wait for better trade location as the day goes on, because there's very little change in the perception of value here. So I'll be watching, of course, overnight high is going to be interesting. Again, there's a lot of targets here to look for. So if you're thinking about to get into a position in the 10-year, try and get the best trade location first. If it doesn't get there, the market may create some sort of structure that will give you another opportunity should price get back to that level. So just a couple of interesting thoughts on that. Hopefully interesting. All right, so let me see what we've got going on here. I saw some pretty good activity over here. Murph, a good topic with the doctor would be, Emma, what guitar is the fretboard from? I have a bunch of trees around the deck in the back of the house, and I decorate the trees in the summer with just beat up old guitars that I might find at a garage sale or something like that, because I like that when people come over and they look at them and they say, "Why are there guitars in your trees?" And I said, "Because that's where they live. The guitars live in the trees around my house." Well, that particular fretboard kind of, through weather, kind of fell off. And I just found it interesting to kind of put up there. Funny that you should ask. It was just from some beat-up old kind of half-size electric guitar, and that fretboard popped off, so I just cleaned it up and thought it was interesting up there. I'm glad. It's funny that you should ask. Murph, with a good topic for the good doctor would be how to overcome tilt. You have a bad trade or miss a trade or bad trades, how to come back from that and not fall into that bad mindset. Great idea, Murph. I will bring that up with the good doctor, and we'll see. And you can always put that question in early. Sometimes we don't get to all the questions, and I don't like that, but put that question in early if that's not already the topic, and I will let you know. All right, excellent. Just not on the radar, yep. Yes, double distribution trend days are sometimes good ways to find opportunities the next day, Mr. Brian. What time? Okay, I think we already took that. Say 8:30. Awesome, thank you. Seems to be pushing higher. Still have 10 minutes. Maybe we get to the edge of value by the time we open. It's always a possibility. These markets, anything can and will happen. Currently, it's still trying to push to the upside. We've got our overnight high up around 39.0650. That would be our first step. And then, of course, that value high is up around 39.0950. We'll see if that works. Green red. Tough to short markets in face of Fed bazookas. Yeah, it certainly is. Got to meow at those rats, right? Yeah, I gotta get a cat to chase those rats away from my levels in the overnight. Got to say, Top Step, those weekly kickoff levels are next level. Well, good. I'm glad. Beach balls and store of value. Yep. Very interesting. Good. Thank you. Guitars in the trees. Yep. All right. Hi, Hogue. How many markets are you trading in any given day? I can't manage more than 2, maybe 3. I focus really on 4 or 5 or maybe sometimes 6. It depends on the opportunities. It depends on what's going on in those markets. But if I have a position in more than 2 or 3 of them, I start to get a little bit scattered, and I don't like that. So I look for the good opportunities. Ray Gun Slinger, very nice of you to bring in the question. I see some new names here. It was really good to see. As always, thanks for watching. I've gone a little bit long. I got a little bit windy today, so I'm going to take my deep breath and let everybody get down to business. Stay humble, grateful, and creative today. You'll see Dan for the market recap today at 3 o'clock. Don't forget about group coaching tomorrow. And I'll see you tomorrow morning. Same bad time, same bad channel, 8 o'clock. Get out there and profit today. Trade well, and we'll see you later.